Good day, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon Daily webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at the disclaimer, and let's welcome Dimitri Pargamonik to the stage to discuss Stock Outperformers Report. How you doing, Dima?
Good morning, Will. How are you?
Good. Let me add your platform to the stage, and there you go.
Good morning, everyone. And first, let me navigate to the page we're going to be looking at, and then we're going to discuss Stock Outperformers. So up top, under the Stocks menu, go to Outperforming Stocks. Click on that. It'll take us to this report. And what this report does is you'll see there's a list of stocks here. Excuse me. A list of stocks here. And these lists of stocks compare the relative performance or the performance of these securities relative to the rest of the market, which we use SPY as our benchmark. And the idea here is to filter out stocks that are showing that they're outperforming the market, but on numerous benchmarks. And then when we take those stocks, what we can do is get insights of which particular stocks are outperforming the market, maybe a certain industry or sector of stocks that are outperforming the market. So let's take a look at these metrics first, and then we'll take a look at the stocks that were filtered out. So up top, you could see our benchmark. That's SPY. That's what we're comparing it to. And we're going to look at it from a few perspectives. We're going to take first SPY, the benchmark, and look at its 7-day performance. So how did it do in the last 7 days? You can see it's up almost 1%. Then we're going to take a look at how did it do in the last 2 weeks, 3 months, and 6 months performance. So you can see in the last 6 months, SPY is up 19%. So it's been up in each of these different periods. And then in addition to that, besides those periods, we're going to look at daily performances. So from day to day, a stock could, for example, we could see in 6 months, SPY is up 19%. It's a lot, but maybe that was all due in a very short period of time. That created that performance. Like maybe 1 month it had a really good period, but what did it do the rest of the time? So we could also go in and look at the daily statistics. Okay, so in this last 15 days, we're going to look at the shorter term period. So the last 15 trading days, we're going to compare how many of those days did SPY go up, right? So 60% of the time it was higher, means 40% it was lower. What was the average daily return? So that's over here, up 0.2%. And what was the standard deviation? And then we take that average return divided by the standard deviation to get this ratio. Okay, so now that we have our benchmark, we scan the stocks using these same metrics, and then we filtered out where stocks outperformed in each of these metrics. So for example, Caterpillar, in the last 7 days, it was up 4.1% relative to 0.9% in SPY. So you could see it did much better in the last 7 days. What about 2-week periods? So in the last 2 weeks, SPY is up 1.6% versus SPY 5.1. And you could see 3 months and 6 months. SPY was up 19%. Caterpillar was up 47.5%. So you could see that on each of these periods, it outperformed SPY, which is our the benchmark we're using for the market. What about on a day-to-day basis? How did those statistics look? So here we see that SPY was up 60% in the last 15 days, while Caterpillar was up 73%. So what that means is that in the last 15 days, Caterpillar was up more frequently than the SPY or the rest of the index. So even when the index was down on certain days, as Caterpillar could have still been up, right? So it was actually had more up days, more frequent up days than SPY. So the market didn't weigh it down. The average return is better, has a higher standard deviation, so we could take the return divided by the standard deviation, because the standard deviation's how much the stock moved around that average. So the higher the standard deviation, the more risky a stock is, right? More volatile from day to day. But we could take that ratio to look at the relative return versus the variability or the risk to compare the two ratios, right? So this is a higher ratio, which is better, right? You want for each unit of risk, you want a higher return. So now that we have this list, so you could see now we have a list of stocks that outperformed SPY in each of these selected metrics that we created, right? Now that we have this report, we could see stocks that are in there or securities that are in there that have outperformed, and has given us now insights where the market, has been more bullish than which stocks or securities the market's been more bullish than the rest of the market. So Caterpillar up top, Micron Technology, Lam Research, Technology Sector, Seagate Technology, Western Digital, SMH Semiconductor. So just going down the list, as we go down the list, some of the things stick out where besides certain stocks, some of these stocks are in the same industry and sector, right? Like they're starting to look like semiconductor sector, right? The semiconductors look like they've been actually outperforming the rest of the market, the sector, and some of these stocks that are in that sector. So you could see here that all of a sudden, not only, stock specific, but we could spot industries or sectors that have been doing better than the rest of the market. As we go down the list, here we see the silver ETF, right? This looks to me like another semiconductor. Here's a mining, right? So here's a mining. Here's another silver ETF. This looks like a gold-related stock. So going down, here's a gold-related stock. So another industry or sector starts to pop out. And now these are like the metals, right? We're seeing miners and silver and gold related stocks and ETFs. So just by looking at this list very quickly, right, the takeaway, the feedback is that, well, we've seen two kind of, just eyeballing and going down, scrolling down, two particular sectors stuck out: semiconductors and the metals. Right? Those really stuck out, and then we got those individual stocks in there. and a couple individual companies like Caterpillar. Doesn't go down the list. Not sure. Resi, and here's one in medicine. So we could go in there and dig deeper to see what's going on. What could be driving that enthusiasm or influencing these certain securities that are definitely outperforming the rest of the market. So, Will, I'm going to stop right there and throw it back to you.
Well, great report, D, and great job explaining it. Thanks so much for bringing these webinars to the Chameleon community. You have a good day and a great weekend, my friend.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great weekend and great trading day, and we hope to see you on Monday.
All right. Thanks, D. Bye.
Bye.
Hey, everyone. Thanks for joining the Market Chameleon webinar series. If you're on YouTube, please thumbs up. If you're new to the show, please follow us, like us, all those good things on all the social platforms. Great job by Dimitri. Everyone have a great weekend. Let me just share the screen for anyone who's new. And just so you know, you can click anywhere up top and click on the free trial. We have a 7-day free trial. So give that a go. Always nice and helpful for us. With that, everyone have a great, safe trading day and weekend, and we will see you on Monday.